Welcome back to another video. Today we have none other than Steve Penny. He is our regular market analyst, researcher, and update every single Friday on your investments, on the economic and financial systems, on precious metals, gold, silver, mining stocks, uranium. And this happens every Friday to deliver the most value that we possibly can to you. So if you enjoy this and you like having Steve on, give us a comment right there down below and let us know that you enjoyed this. Give us a comment down below. Hit the like button right over there and right over there. That's the other way you can let us know that you enjoy this. And last but not least, be sure to support Steve's work. Right there down below is the free newsletter called Silver Chartist. The reason I had Steve on is because I went through the free newsletter and I was blown away. I said, Steve, this is better than most people's paid newsletter. This free alone is going to be worth a lot of money to folks. And I said, can you come on and do a regular market update for us? And so that's what we're going to be discussing here in this video. And I want to encourage you to sign up for free to Silver Chartist in the description and pinned to the comments right there down below. That's Steve's newsletter.
All right, guys, Steve Penny here. Welcome to another weekly metals wrap on Jake's I Love Prosperity channel. I really appreciate Jake lending this platform to me, and I appreciate you all for listening each week. What a great community of like-minded investors here, and it's a privilege for me to be able to share my thoughts with you and be sharpened by yours as well. So I'll start with just a couple of general comments before we look at the charts. Both the precious metals and uranium sectors showed really healthy price action this past week, back testing their previous breakout levels or initial support and then rallying strongly into the end of the week. That's certainly constructive. However, the uranium sector does remain just a little bit more technically stretched than my contrarian nature would prefer. However, I continue to have very strong conviction that we're in the early stages here of a long-term uranium bull market, and there's plenty of upside ahead, regardless of how the short term may play out. Now, as I mentioned, I also do track industrial metals, namely copper and nickel, as those are my two favorite battery metals, and I also track platinum as well. Now, I want to mention here that copper is beginning to flash some real warning signs. We're extremely stretched technically, just above some key resistance levels, just below some very key resistance levels, and the price of copper does remain susceptible to a sharp pullback. However, if that does happen, I would view that as an opportunity to accumulate long-term positions. But I wouldn't go chasing copper here. And then finally, one more risk that we should really all be aware of and that has my attention, especially lately. And then finally, another risk that we should all really be aware of is the technically stretcher of the general equities market. Stocks and general equities are overvalued on a fundamental basis, no matter how you measure it, and they're also very stretched technically and due for a sharp pullback. Now, a lot of people throw around the term crash a lot. Now, we are headed for a stock market crash. That's going to happen at some point. But I think more likely is a 15 to 20% pullback, and that could certainly feel like a crash. And if that happens, it would likely affect our precious metals mining stocks and uranium mining stocks and present opportunity. So with all of that said, let's go ahead and take a brief look at the charts. So we'll start off by taking a look at some ratio charts. And I think ratios are especially important right now because so much liquidity and money is being pumped into the system that literally almost everything is going up. So measuring things in dollars is becoming an increasingly less reliable unit of account, and ratios can really tell us what's undervalued, what's presenting the most long-term, compelling long-term value proposition at any given moment. And we'll start here by taking a look at a chart of the gold to silver ratio going back to 1980. And you can see where we currently are, just about 70 to 1 on that ratio, which has come down a lot from the March low of last year of 123 to 1. Now, that was a historic anomaly that has never been seen before, and silver's outperformed gold by almost a factor of 2 over the past year. And at face value, you might say, well, silver's probably getting overvalued now relative to gold after hearing that. But historically, from a very long-term perspective here, we can expect silver to continue to outperform gold by a fairly wide margin. Just returning to the 1980 ratio of 15 to 1 would see silver outperform gold by over a factor of 4 to 1. And even if we just went back to the 2011 high of 33 to 1, silver would still outperform gold by a factor of 2. And that's a lot of leverage, a lot of potential upside relative to gold, and that's especially so in the junior silver mining stocks. So here's a chart of the junior silver mining ETF, SILJ, measured against the gold miners ETF, GDX. Now the data for this chart only goes back to 2013 because that's when SILJ began trading. But even with the limited data that we do have, we can see that silver miners have been outperforming their gold mining counterparts by a wide margin, and there's still plenty of room to run just to even get back to this 2016 high. And the key takeaway here is that in bull markets, junior silver miners outperform gold miners. Now, personally, part of my long-term exit strategy is to swap from silver miners into more senior gold miners as the bull market matures, but really we've got a long way to go before I'll be considering doing that myself. And that's something I do alert our premium members to whenever I make a change to my own personal portfolio, I let our members know. Here's another really powerful chart here showing the Dow versus the gold ratio, or I should say the gold versus Dow ratio. And we can see we're approaching the apex here of a triangle pattern. And these patterns are very powerful as it shows a battle between the bulls and bears. And these kind of patterns typically resolve in a really sharp move. And my bias is, of course, up for gold to continue to outperform the Dow. And what's interesting is that in previous bull markets, that Dow-gold ratio actually peaks at 1-to-1. Now, that may sound sensational, but in 1980, the Dow bottomed at 850, and gold peaked at 850. So that gives you a 1-to-1 ratio. So if we just return to that ratio over the next handful of years, gold should outperform the general stock market by a factor of roughly 20. Now, that's simply astounding. And if gold outperforms by that wide of a margin, you can only imagine what our mining stocks will do. All right, before we move into our charts for gold and silver, I want to briefly take a look at a chart of the dollar, as we haven't shown this in a few weeks now. And what immediately jumps out to me is the series of lower highs and lower lows dating back to March of 2020. Prices trading below a declining 50 and 200-day moving average. So this is a downtrend no matter how you measure it. The dollar is in a downtrend. However, we do have very key support here at $89.21. And then below that, we've got the 2018 major low at 88.25. Once we clear 88.25 to the downside, things could really accelerate to the downside for the dollar and to the upside for commodities and precious metals. Now, conversely here, you could make a bullish case for the dollar here and say we're carving out a little reverse head and shoulders pattern, with this being the left shoulder, this being the head. And if we were to curl up here and then break above this 94.65 level, that would be a bullish technical reversal. However, we're nowhere near seeing that happen yet. It's just an outside possibility that I do want to mention to you. Here's a 2-year chart for gold, and what I did here is remove all of the noise. I removed all of my extra indicators, my moving averages, and I wanted to show you just the most important lines that I think matter the most here. And these are the lines that the institutional trading algorithms are programmed to look at. So the first one is this $1,800 level. This is key support going back years. And we were able to get above that. We came back and back tested it early this week, rallied, and now the big resistance is the upper rail of this clear downtrend channel. Now, if we were to look on the daily chart, this level would closely coincide with the 200-day moving average. So this is really stiff resistance here. I depicted us breaking through that next week. However, I actually wouldn't be surprised at all if we came back and back tested that $1,800 level one more time prior to breaking out. And then we've got resistance up here around 1960. Followed by the previous all-time high of $2,089. So you can see my little roadmap here has us retesting that level later in 2021. Now, a lot of precious metals enthusiasts, myself included, would like to see us get to those new all-time highs sooner than that. And I think that remains a very real possibility. However, I like to set my targets very conservatively. And I think $2,089 by the end of the year is a nice realistic target, with the caveat that I wouldn't be surprised in the least bit if we exceed that by a wide margin in 2021. Here's a longer term chart for silver, and I labeled this chart climbing the ladder towards $50 silver. And what I did over here is lay out the key resistance levels to watch on our way towards $50 silver. And these are important because typically what happens is as you approach a key resistance level, you typically come up, test it once or twice before actually breaking through. Then you get a little more further upside momentum. And then typically you come back and back test what was resistance is now support. And then that pattern proceeds and it's kind of like climbing the ladder towards $50. So these are the key levels I'll be watching: $35, $37, $44, and eventually $49.82. On the weekly chart, you can also see this triangle pattern here. And these triangle patterns tend to resolve in the direction of the prevailing trend. And in this case, it's up. So even though we could see a little bit of backing and filling here, my bias remains to the upside. And once this $30.35 level is cleared, that's the big number to watch over the intermediate term here. Once that level is cleared, I think we could see a fairly quick and aggressive move higher towards $50 potentially later this year. Here's a chart just for GDX, the senior gold mining ETF. And what we see here is very bullish price action as price staged a clean breakout from this 9-month downtrend channel that you can see clearly right here. And then we came back and back tested that 2 weeks ago, perfect back test prior to resuming the uptrend. So GDX looks extremely healthy here. And it's really nice to see the senior gold miners kind of leading. And typically what happens is the junior miners follow suit because the big money is starting to pile in. They go towards the large cap gold miners, and then the more speculative money kind of flows in afterwards. And of course, I put a note here, nothing goes straight up, but I do expect higher highs and higher lows. Before we look at uranium, I want to show just a couple of charts of my two favorite battery metals, copper and nickel. And this copper chart shows copper has just been on fire here for the last few months. In fact, we've gone from under $2 to almost $5 in a very short period of time. This is a monthly candlestick chart. And what you see here is price came above, printed a new all-time high just this month, And then this right here is a long wick just above that resistance. Now, if we close the month below this resistance at $4.60, that's going to be a pretty bearish candle and likely indicate some backing and filling or even a sharp pullback in copper. And that would actually be healthy and it would be welcome. I'm not chasing copper stocks here. I own a couple, but I would love to see a really nice pullback in copper to give the opportunity to accumulate some more positions, as I believe copper has a long runway ahead. However, it's probably just a little bit ahead of itself right here. So in the short term, I would urge caution. Nickel, on the other hand, has just been beaten down for the last few weeks, and it's riding just above its 200-day moving average, and it's reclaimed this uptrend channel. So nickel is looking pretty compelling here. All right, finally, turning to uranium miners. I always like to start with a chart of spot uranium as measured in the uranium futures market. I always like to start with a chart for uranium, and this chart here goes back 4 years, and what we can see is price rising within this gentle uptrend channel, and we're currently bouncing off the lower rail of this channel. And if we just go up and test the upper rail, which is a very likely scenario, that gives you a target of near $40 uranium, or even a little bit more than that, towards the end of the year. And if uranium goes to 40 plus, these mining stocks are going to be valued probably of multiples higher. I like to use the ETF URNM to just measure sentiment in the uranium sector and as a proxy for all of my uranium stocks. And what we saw last week, this is actually very bullish price action on the daily chart. So we got a breakout to new all-time highs. And then what you want to see, just like I was talking about with silver climbing the ladder, once you get a breakout, it's really nice to come back and back test that breakout level. And that often presents a nice compelling entry point prior to resuming the uptrend. However, I want to mention here with uranium stocks, they're quite stretched technically on the weekly and monthly chart. And there's also a lot of distance here between the 200-day moving average and the current price. Anytime price is about 50% above its 200-day moving average, that's another indicator that perhaps things are due for a period of cooling off, maybe some backing and filling, or even a pullback. So some caution is warranted over the very short term in uranium, but like I said in the opening comments, I am wildly bullish on uranium over the intermediate to long term. One of my favorite uranium stocks to watch and track is Energy Fuels, and you can see the ticker here, UUUU, and this is a really nice pattern that we see here. You might call this a bull flag pattern as price is moving in a counter trend channel that's very well defined above this rising green uptrend line. You can see right here, going back to November of last year. And every time prices came back and tapped this green uptrend line, we've rallied. So here we are tapping it again. Now, if we break out above this red downtrend line right here, that would project a fairly quick move up towards the $7.83 recent high. And conversely, if we fail here, if support fails, a back test of this $4.82 level would be the path of least resistance. To be honest with you, I'm actually hoping that support fails because I would love to add to my uranium miners at slightly lower prices. Also, keep in mind, especially on Energy Fuels here, there's some very significant resistance between this $7.83 high and $8 that goes back a few years. So there's very stiff resistance up near that $8 area. All right, guys. Well, hopefully you found this helpful. We like to keep these short and sweet every week. If you'd like to check us out, you can go to silverchartistreport.com. We put out a free weekly letter every Sunday where we expand on the topics that we just talked about here in more detail. And that's completely free. We do have a premium letter where you can get an over-the-shoulder look of exactly what I'm doing in my own personal portfolio. Anytime I buy or sell, I send out an alert to our members. But if you choose to just be a free member, we don't spam you. We don't hit you with all kinds of high-pressure sales tactics. Our goal is to provide a ton of value for free and serve you at whatever level you choose. So silverchartistreport.com is where you can get that this Sunday. So look forward to speaking with you guys next week. Have a wonderful week, and God bless.
Okay, thank you for watching this video. So if you enjoyed this and you want to see more regular market updates from Steve, from Silver Chartist, be sure to hit the like button on this side right over there and this side right over there, and leave a comment down below and let us know if you enjoy this. If so, we'll keep making more of these. Now, I want you to go to the link in the description in the comments right there down below. That's to sign up to Steve's free newsletter. Like I said, I had him on because it's literally the best free newsletter that I'd ever seen. And I said, Steve, I'd love to have you as a regular market update. And we're going to create the most valuable sector that we can on YouTube to help as many people as possible. And so if you want to take it the next step, learn mining stocks, really the in-depth of what's happening in mining stocks, in gold, in silver, in the overall financial markets, in uranium. If you want to see this all broken down, that's the Silver Chartist newsletter. There's a free link to it right there down below in the description and pinned to the comments right there down below. Last but not least, hey, thank you, Steve, for coming on here today, educating and informing us on what's happening in the world.